Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on the review of stock market activities and expectations. The Nigerian stock market has remained the toast of investors in 2024. The Nigerian Exchange All-Share Index, NGX ASI, has gained 11.7% as of Friday, 12th January 2023. The NGX ASI measures the performance of all the stocks on the Nigerian exchange. The performance was impressive across sectors. The insurance, banking, and consumer goods indices have returned 22.8%, 15.9%, and 14.4% respectively so far this year. Analyzing the returns, these are above inflation returns. Inflation rate was at 28.2% as of November 2023, delivering positive real returns to investors. Stock investing is for investors with a medium to high risk appetite due to price fluctuations. As you may be aware, investors earn two types of returns, which are 1. Dividend return. This is the return based on the dividend, interim and final per share received divided by the price per share. 2. Capital appreciation. This is the gain due to the price movement, which is when the current market price is greater than the purchase price. Depending on your investment strategy, you may sell the shares to realize the gains. A review of the domestic and foreign transaction reports as of November 2023 shows that domestic investors have carried out 88.9% of total transactions, while the balance of 11.2% is by foreign investors. A further breakdown shows that the retail domestic investors account for 36%, which is 1.02 trillion naira of total transactions, while the balance of 64%, 1.84 trillion naira, is by domestic institutional investors. The foreign investors recorded a net outflow of 48 billion naira as at November 2023. Now, here are the expectations. While the stock market seems to trade in the overbought region technically, the current prices may be worth more than the actual value of the stocks. We continue to see long-term opportunities in the stock market. However, we plead for a bit of caution, gradual entrance, given the significant rally this year, as the market correction may set in after the release of the full year 2023 results and corporate actions if it's below market expectations. Investors may also rotate into more defensive stocks or sectors if the market correction sets in, that is, stocks that pay consistent dividends and declare stable earnings regardless of the state of the overall stock market. Investors with long-term investment funds can take positions in stocks with consistent dividend history at least 4 out of 5 years. In addition, stock mutual funds or stock exchange traded funds can also be a better option if you do not have time to monitor your stock investments or have little or no knowledge about the stock market. Thank you for listening. Please join us same time next week for another interesting and insightful session. For comments, questions, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed.